Good evening, it's Adil bringing you a inter-market analysis perspective of the US markets. Okay, going for February 2015, a new month and a new start. Okay, so basically looking at the fundamentals first of all, the key points, as we all know, Friday's GDP number missed, therefore that created a bearish scenario and eventually the market sold off. We have Brexit concerns, we have Russian concerns with regards to a drop in interest rates and the economy and world growth implications there. Okay, we had China down overnight, we have the yen certainly strengthening, okay, and with a potential key support level in the USD JPY breaking. As we all know, the US markets are very interwoven, intertwined with the yen, especially the USD JPY. Okay, although we did have a link with the Euro JPY, but that got broken as soon as we did QE in Europe. Okay, and certainly distorted to a large extent. So basically, weaker GDP obviously is negative. We had a print at 2.6%. We're expecting above 3%. That certainly doesn't bode well. Although having said that, that then does the counter argument is that certainly supports the individuals who expect a rate rise next year sometime, not rather than this year, as in Mr. Bullard's reference to June 2012 or 2015, sorry. Okay, now we also have to take into effect that there was a leak, I think on Thursday, where we had quite a stellar rally based on Miss Yellen's leak with regards to telling a Democrat that there will be no rapid increases in interest rates and nothing in the foreseeable future. You know, you can take that however you want and you can interpret that however you want. Also, we had Apple earnings as well that were quite stellar. So overall, I mean, one could argue that yes, we had the FOMC minutes and they were very hawkish. Everybody interpreted them as being hawkish, and that's why we had the euro making a new low and the Aussie and the Kiwi under pressure, etc., etc., etc. But if that was the case, then why didn't USD JPY move higher? Okay, I understand the counter argument there is that the BOJ are on hold and are not looking for any further, or not looking towards any further easing, because as we all know, central banks don't work all in one go or at any one time. They pass the baton, so they pass the relay on to the ECB. Now it's the ECB's turn to do QE, and that will generally keep global asset markets afloat. Okay, so that's basically how the game works and how they play. How do we interpret that? How do we trade that? Okay, so as you can see here, the S&P 500 is negative, the Dow was negative, and the Nasdaq was negative. So overall, it's a negative effect, or it's being interpreted as being negative. Therefore, it's a risk-off scenario for now. The other important factor that we had was the actual aspect of the Brexit scenario. Certainly fair going into the weekend that Greece may well exit, and that obviously creates a risk-off, especially going into the weekend, risk-off scenario going into the weekend. Not only that, we also have the Israel-Hamas or Israel-Syrian situation that certainly seems to be pushing, well, basically caused oil prices to spike late Friday. So again, that may well have been a geopolitical concern, and that could have caused a sell-off as well. So we'll see exactly how that is being interpreted. Although we have had a counter argument now, or counter news flow. I mean, you've got Bloomberg. This is something that I've already mentioned already on my European market analysis. Is that we've got the Greece stating now that Greece will repay ECB, IMF, and reach deal with Europe. So again, Brexit concerns will certainly subside, and that will potentially create a risk-on scenario. Okay, so now that we know overall, like I said, going into Monday for US session, is that it no longer has QE, therefore it can't really move higher or float higher or have the central bank put the movement, and especially with regards to a rising dollar hurting exports. That's why the US markets are lagging. And given the fact that Europe is more attractive from a QE perspective, and given the fact that the central bank put is there, and a potential growth perspective as well, then that certainly is the bullish case scenario. Okay, going into Monday's session for the US markets. Okay, right. So let's have an interpretation now from a technical perspective as to what we expect and what could occur. Before I do that, just want to clarify. I'll give you 3 points, or even 4. Number 1, USD JPY and the S&P 500. Watch that correlation. If we see the USD JPY break below this key support level, which I've already highlighted in my European market video, okay, this key level here breaks lower, that will generally send the US markets lower as well. Okay, If the Asian Nikkei is down overnight, the Shanghai is down overnight, then you create a risk, expect a risk off, and expect the support level to be breached in the S&P, and down we go. Okay, down to the 200 MA, which I'll explain on the technical chart patterns. The other scenario that we look for is socioeconomics and geopolitics. So number two, geopolitics. So any escalation, Russia-Ukraine, any escalation in Israel versus Syria, that creates a risk-off scenario. Socioeconomics, any escalation with regards to Brexit and, say for example, Germany backtracking or Greece backtracking or the Russian equation coming into play, where we've already had articles and rumours that the Russians may well bail out the Greeks, and that will create another Pandora's box by in and of itself. Okay, so how does Europe interpret that? So again, I've discussed that scenario as well. Okay, the other scenario as well with regards to the dollar, if the dollar continues potentially forward, dollar continues it's still a move higher, then that again will obviously cause a risk-off scenario. But given the fact that we have Miss Yellen talking the dollar down now secretly, even though it's been leaked, that again poses a challenge. So can you see the amount of fundamental currents that are running in this market right now? And I can't sit here and say this is going to happen, this is going to happen. All I can say is these are all the potential key important variables that we have to watch out for, and then obviously we have to avoid them or move around them, and obviously navigate based on price action as well. Okay, so let's have a look at the technicals now. So if I start with the S&P 500 chart, this is the key chart. Okay, so if I look at a weekly chart, for example, it certainly doesn't look bullish. Okay, so it's certainly a bearish looking chart, and given the fact that it's a bearish engulfing candle for the week, so that's certainly bearish. Okay, daily chart, again bearish, so the bear flag situation or scenarios playing out. We are into this key support level now. So previous resistance equals support, you have horizontal support, and you have diagonal trend line support. If this breaks here around the 1990 to 1990 level, then you're looking for the 200 MA next. The last next support level is 1975. Okay, on the daily chart. If I go to a 60-minute chart, as you can see here, this is certainly coming back and retesting this key pivot zone, and which, like I said, also coincides with the USD JPY. So the USD JPY hold that level, you can expect the S&P to hold that level. If that doesn't hold the level, then the S&P will not hold this level either. Okay, let's go to a 10-minute chart of the S&P 500. We held this key diagonal trend line, very important. We tested the high based on the Yellen rally with regards to the leak with the Democrat, and we failed to hold, and the market gave back everything, even the Yellen rumor as well. So only my understanding here is that Yellen rumor was potentially denied, and that's what caused a sell-off. Adding the fact that a weaker GDP number is in place, and then obviously add them together. Adding the fact that you've got Greece fears or Brexit fears over the weekend, anything could happen. And given the fact that the Russian equation in Greece, and also with regards to the interest rate cut, obviously doesn't bode well as well. So all those factors together, potential risk-off scenario. So the key now will be whether we hold a 1990 support level. Okay. Now we can corroborate that with our IWM chart, i.e. the Russell 2000, and see exactly where support and resistance is being held or not. So if I bring up my chart, the Russell 2000, we did have an inverted head and shoulders formation. That formation failed to play out, which I did highlight to individuals on Twitter, and obviously my subscriber base in the live analysis service. So a failed inverted head and shoulders pattern usually means a sell-off or a move in the opposite direction. We do have a unfilled gap below that needs to be closed. We have an unfilled gap above that needs to be closed as well, so it's the bottom of the gaps. But from a daily chart perspective, that certainly does not look very bullish, given the fact that it's a bearish engulfing candle. Same scenario here with regards to the weekly chart. I mean, this is something that needs to be updated. We did have the head and shoulders, and obviously we failed because we recaptured the neckline. But for now, we are testing this downside again, and we'll see exactly whether this support level can hold. And this green candle certainly has given way. Again, it's not exactly a bullish sign from a weekly chart either. Okay, so a 60-minute chart certainly doesn't look bullish. Again, we're testing those lows, and that's going to be the key and important test from that perspective. Again, we were holding the support level, then we broke and moved lower, and we have the unfilled gap below. So again, that's going to be a test whether or not we can fill that gap. Okay, let's go to the Dow Transports now, or Dow Industrials now. The Dow Industrials, we're looking at a daily chart, certainly very bearish. We negated the bullish engulfing candle based on Yellen news. That exactly isn't very promising. Okay, again, like I said, risk off scenario. The next level really, I mean, we're holding this previous resistance equal support, but the next logical target seems to be the 200 MA, or the test at the 17,000 level. So that's going to be very important with regards to the Dow. Looking at a 60-minute chart, certainly doesn't look very promising. Again, potential double bottom there. Again, we'll see whether that holds. Again, double bottom scenario. Now we can corroborate that move with the Dow Transports and see exactly what that's trying to tell us. Looking at a weekly chart, the Dow Transports, again, that's not exactly a bullish sign. The key test now will be whether it can hold its previous resistance equal support. Daily chart, again, we are looking at this potential support zone here, and we'll see exactly what happens with regards to this market, whether it holds or not. And 10-minute chart, again, although it does need to be updated, it's certainly testing key and critical support. So again, all eyes on the USD/JPY. That should hopefully dictate the movements there. Looking at the Nasdaq, let's look at the weekly chart first of all. Weekly chart, again, bearish engulfing candle. That's not exactly promising for a bull or anybody who's bullish. Bearish inside bar. We do have an unfilled gap above, given the fact that we had stronger Apple earnings. That's certainly possible. Okay, although having said that, this does look like a bear flag, and we're looking at potentially closing that gap below, which has been there for quite some time, or potentially testing the 200 MA. Okay, looking at the 60-minute chart on the Nasdaq, again, there certainly is a very strong argument, given the fact that we have had Apple earnings, that we are creating some form of inverted head and shoulders formation here. So this is your head, this is your neckline, potential reversal, and up we go. Provided we hold the fib 61%, we should be fine, or even 75%. We are 61% for now, 4145. So from my perspective, if I was going to buy any index, this will certainly be the first one to buy, looking for that gap to close above, given the fact that Apple earnings were quite stellar. Okay, now let's corroborate that and verify that by looking at the biotechs. The biotechs on a weekly chart at the moment, still a doji, so one can argue that it's just some healthy consolidation. We have had a topping tail on this candle, so again, this is a cause for concern. Potential bear flag scenario here, potentially testing new lows. That certainly can't be ruled out. Looking at a 60-minute chart, certainly doesn't look very promising, although for now we'll give it the benefit of the doubt and potential consolidation. 10-minute chart doesn't look very promising. We've got a double top scenario here now at 3440. So overall, very mixed picture there. Certainly doesn't support any real overtly bullish situation. One could argue here on a daily chart of the actual semicons that we are testing key support now, so certainly an argument for a bounce, which again supports my argument that we're looking at an inverted head and shoulders in the Nasdaq, given the fact that the Greece has obviously come to some sort of conclusion or some sort of deal with the IMF and the ECB. Then certainly that does certainly potentially add weight to the inverted head and shoulders in the Nasdaq. Okay, and that in turn should obviously propel the DAX higher as well. So again, out of all the indices, out of the US indices, the Nasdaq looks the strongest and the more likely individual or most likely index to bounce and move higher, and that certainly needs to be respected from that perspective. Okay, folks. Now there is one more index that I've been told by Anna Cooling, one of my mentors, to actually look at the Wiltshire, and I'll certainly bring that up for you as well. The Wiltshire 5000, which apparently can be quite important. According to her. Okay, so again, we are into horizontal support on the Wiltshire 5000. So one would argue that given the fact that USD/JPY holds and the Asian markets hold, then my bias would certainly be looking for a potential bounce on the US markets. Now obviously, if USD/JPY fails to hold, which means the yen is obviously appreciating, which in turn hurts exports, which in turn, given the fact that you have an inverse relationship with the Nikkei will obviously go down. Shanghai, if Shanghai is obviously weak as well, and that is forced to move lower as well, then obviously these support levels on the US market should not hold. Obviously Europe will play an important key as well. If Europe can obviously get its act together and obviously come to a final conclusion on Greece and remove all doubt and fear and anxiety in the markets, and that can obviously present itself with a nice short squeeze. If we get evidence of a short squeeze in Europe, that will feed through in US, and like I said, the Nasdaq will be the best buy from my perspective. Again, these are all scenarios and situations that must be playing out in order for my trade to occur and be successful. So I hope I've given you an insight here into US markets and exactly where these charts are sitting at key levels, and it's going to be very, very important with regards to how the US markets perform, and it's all about holding that support, as you can see in the S&P Y chart on 1990, below 1990 bearish, above 1990 bullish, full stop. Risk on, risk off, wax on.